Testing audio. Test. Testing audio. Testing audio. Hey, good morning. How's everybody doing this morning? Welcome to the YouTube simulcast. We're about to get started on the strategy planner every day at 7 a.m. Eastern. Strategy planner is an overview of the ES, where we are kind of transferring or translating the interim price action since Saturday's bigger picture review, how that's affecting the overall market, what we might expect, what the market needs to do to have a bigger picture outcome, but also how that impacts today, what kind of stuff is coming. Looking forward, obviously we're going to talk about CPI and stuff like that. And a couple potential setups at this, then that. 9:15, everybody will meet back here and we'll look at tactics. Any what's greeting the open and what kind of setups are immediately actionable or might develop shortly that would be immediately actionable or worth stalking. The CPI reaction, what did it do to the complexion of the session, etc. So if you miss any of either of those, you can see the recording, and I'll drop the recording link in the chat. Getting ready to start in just a moment, literally. Alright, good morning and welcome. It is Wednesday. It's time for a strategy planner. We've got CPI coming out this morning. It is the week's first real economic report of consequence to the market. It's not been a totally devoid calendar, but nothing that is influential to price action. And by the way, CPI today and then PPI tomorrow are the only two scheduled reports that are consequential to price action and reliably influential anyway. So that basically magnifies their prominence or their potential impact. And might have had some earlier effects, not just in yesterday afternoon's slide. Possibly being some late discounting, hunkering down, defensive posturing ahead of the report, but also that could have been an explanation for Monday, or at least a catalyst. Not usually that forward-looking, that far in advance of an impact on the market, but there's always somebody who's anticipating and acting in advance, but with nothing else on the calendar, then could have been more of an impact. But just to look at this without the overnight and point out again, we had last Monday, Tuesday, multi-session range, breakout on Wednesday. Thursday's second consecutive higher close did not, so no confirmation. That would have required an eventual third higher close, would have given us the context that a reaction down was temporary. We don't have that context. There's no unfinished business above. And there were a couple of warnings, 3 warnings, Thursday and Friday, some passively bearish behavior. And also Thursday and Friday's sideways range formed a multi-session range that Monday, breaking lower, qualified as a breakout, breakdown. This time, yesterday, the second consecutive session did confirm. So we do have a confirmed breakout on the downside. So whatever happens today or from now until an eventual lower close, that is under yesterday's low, we'll know is temporary. In other words, if a rally develops back to prior highs, through prior highs, toward prior highs, whatever it is, we'll know it's temporary. That'll be our assumption, at least, because the confirmed breakout requires at least an eventual lower close. At least an eventual third lower close, maybe 30 lower closes or whatever, but maybe immediate as well, maybe no bounce. I do note that yesterday's likely lower low was 60.38, and we only got to 60.40 or tested 60.40, attacked 60.39. That's just not enough. There are multiple precise objectives at 60.38 measurements, lower prior highs, etc. No, not etc. That's it. So, not surprising that we haven't been able to get too big of a bounce. Yesterday's close, by the way, just so you know, was actually 60.48. 60.48 is support to the overnight range. Post-close extension higher, wasn't rejected. This is optimism. This is last-minute optimism ahead of CPI. It's not a lot. It's kind of camouflaged, but it is optimism, and not, as I say, not a lot, not so much that we can look at it as necessarily being contrarian, but enough so that I just can't countenance getting long ahead of CPI, even having attacked to within 6 ticks, 3 to 6 ticks, the 60.38 target. So if there's a bullish scenario for today, it would be to tag 60.38, or 2 bullish scenarios. It would be to tag 60.38 to whatever degree, and it's a CPI reaction. The knee-jerk reaction, don't be surprised if it is well into the double digits, and within 60 to 90 seconds, when the headline's knee-jerk reaction has passed, it's back to a single-digit reaction or even reversed. But tag 60.38 somehow and greet the open already back above 60.48. So it's not enough to just neutralize that attraction below, but also to greet the open back in this bounce mode recovery. It's still going to be temporary for the bigger picture, but for today's purposes, or maybe even more precisely for this morning's purposes, it will have the potential for a bounce. There's still some resistance above we'll need to get through, but at least get to. Back into yesterday's range, 60.63 is a big line in the sand, just triggering the bias up. If 60.58's bias up signal can be recovered through 10.15, then that would put into play an attraction to the bias up target and so on, or maybe no more. But we'll look at that as that develops, if triggered, and point to the pullback limitations, etc. The other bullish scenario, having trended down into yesterday's close, very last minute bounce to 60.48 didn't disrupt the downtrend. I have a setup called the session long rally, and so we look at that first. Does it qualify? Do we even care about that setup? Did we trend into the close? Yes, trended down. Okay. Question 2. Yesterday afternoon's high, the reverse correction, did it print during the bias window, or was it exceeded afterwards? So in other words, the bias window, 120 to 230 down here, was that the afternoon high, or was there a higher high after that? How entrenched was this late selling? So if we look back, yeah, the afternoon high prior to trending down was during the bias window. That's the noon hour high up there. So that was 60.65. So that's an important line in the sand. Having trended down into yesterday's close, exiting the first 15 minutes, 9:45 to have recovered 60.65, that would trigger a session long rally setup, which we'll talk about if it does, but it basically means what it says, no more, no less. It doesn't speak to the substantiality or the slope, just that sellers are marginalized. But that's a big line in the sand, the other bullish scenario. So bearish scenarios, though, just keep moving along to produce that eventual third lower close, produce it sooner rather than later, which is fine. You would think, well, that's great. The setup gets to prove itself out right away. We actually want a counter trend bounce so we can arbitrage against that future resolution, knowing that the resolution is likely to be down. The bigger the interim bounce, now that sellers are entrenched, at least awaiting one more lower close, we can trade to the upside, but we can also know that it's basically a game of musical chairs and be looking for candidates for a peak. But of course, the bearish scenario just extends down, takes care of 60.38, not just pre-open, but post-open. Even if there's a pre-open dip, a reaction down to 60.38 or lower on CPI, and has already recovered, as I described, one of those bullish scenarios, we'll still be on the lookout for the tendency of the intraday crowd, this masochistic tendency to duplicate an already recovered overnight drop. So we'll be on the lookout for that attraction during intraday hours. And if that develops, we're not going to do the bigger picture right now, but just to point out, there's some important support being tested, both trending, calculable just in terms of some Fibonacci projections. Oops. From the turn, there's the 60.38 handle. If that breaks, we start looking at the potential for 6,000 area. Thanksgiving's range. 60.25, the bias down target. So meet back here at 9:15, and we'll see what immediately actionable setups, if any, are greeting the open, and certainly how the CPI reaction has impacted. And I'll mark up the chart a few minutes after CPI when we've seen the reaction to point out what might be narrowing down. I don't know that anything new would be developed by then. Any questions about any of that, please ask. On Bitcoin, so it's making a stand. It looks like it's making a stand. It's still fluctuating around a 96 handle with basically two spike lows, one of them being totally contained within another. It's just not a durable bottom. That's not to say it can't produce a bigger corrective bounce, but if there's a bigger probe and rally through 100 coming, then there's going to need to be in this area at this time a deeper, slightly or substantially, whatever is irrelevant, but a better test of the lows. So we're coming into resistance for Bitcoin for this bounce. Bitcoin, get back out above 98.9. I'm talking Bitcoin now. Get back out above 98.9, and you can have some room for a bigger bounce. It's not to your longer term advantage, but it certainly opens the door. A lot of resistance up here, 98.7, 98.9, etc. Cut off at 100, 100,500, but probably not of much consequence. Probably get back up, threaten the highs, maybe even probe the highs, and if this were to extend to 108, big number, this would be a bigger, more credible top. Still not looking at this as a top. The near term, for the purpose of forming a better rally, just a little dip to 93.6. Dip to 93.6 and react, whether precisely or overlapping it abruptly, a blip down through it that recovers. But that's marked as a reversal point because it needs to hold if it's tested. Ethereum, meanwhile, we've got this uptrending channel. Uptrending channel, broke it, back tested it, broke lower. No fresh low since the break, but since the retest, there's a little bit of bobble there. Back test, that is. Dip, back test again. Their interim low is broken, so the default is, this is searching the combination of the spike low, the more optimistic shallower low. I mean, not a great spot for optimism to suddenly develop without further fleshing out pessimists. They're going to be an anchor. They're just waiting for a spot to bounce. This is a pretty good spot. Like, we'll look at currencies coming out of CPI after the open. After the first hour, we'll pull up their charts again. If this, for example, Ethereum has not maintained a bigger recovery, and I'm not talking about a spike, a blip up after the news. If Ethereum hasn't maintained a recovery, instead, if it has reacted down, that'll be presumably the beginning of a better test of those lows, if not a deeper pullback. Solana's making a run as it's come into these lows, 204, 206 a couple times, several times. It's still not optimal. Still not optimal to have tested, retested, re-retested. This is basically a stalled pattern. This is the bearish scenario. That Solana's drop is a stalled pattern. It's already entrenched the lower lows coming, is the bearish scenario. It's already chipped away at support, totally utilized this downtrending supports reaction, the Fibonacci calculation, etc. This isn't the only Fibonacci projection down here, but a lot of other swings, they're all being chewed through, and now comes the time for breaking lower, and suddenly there's no strong-handed sponsorship. So a stalled pattern will backtrack to just sweeten the pot to attract stronger-handed sellers so they can sponsor the next down leg. My line in the sand for that was right here, 222, and it's being tested. And it's being tested all the way up to this last consortium of pullbacks, higher prior lows. These are resistance. Higher prior lows, and now that that's tagged, we can identify a sell signal. Not just back under 222. Probing 222 now creates room to fluctuate down to 220, 220.50. This sell signal under 220.50, which actually, yeah, 220.50, back under 220.50, at this point, having now bounced, I mean, this is relatively recent, having bounced all the way back up to 226, important line in the sand, that's the stop. Stop and reverse to short. 220 says this sweetened the pot enough to attract stronger-handed Solana sellers to produce the next down leg. Otherwise, maintain. There's room to fluctuate down to 220. Now, I'm not talking about the knee-jerk reaction to CPI. Knee-jerk reaction to CPI, if there even is one, just as, negative reaction, risk-off sentiment for 60 to 90 seconds could have a great effect momentarily. That's not what I'm talking about. A few minutes after CPI, or at any point that there's been several minutes probing under 220, consider that signal to be engaged, and we'll look at what would qualify to invalidate the sell signal. But start recovering or continue recovering and extend the recovery, not just above 222, but above 226. And I'll give buyers every benefit of the doubt at that point, and I'll identify where I'd stop giving them every benefit of the doubt. That the lower end of this channel has held. Let me just point out one bit of math. So here's that downtrending channel's support being chipped away. Sellers stalled. This is the technique. Take the parallel trend line. That's got to be pretty accurately drawn. It's got to be pretty accurately drawn. Parallel to the last relative high. Encompass as much as possible. Now I'm going to take the last touch of it to its counterpart at that moment in time. I don't know if we can see this. Let me back this off a little bit. Still a little bit of room here to overlap even, maybe as a knee-jerk reaction up to 227. That's the 61.8% retracement. I've actually got these inverted. 38.2, 61.8. The inversion of each other. So even wanting further confirmation, room for noise up to 228. If you're looking for any other line in the sand. But keep this recovery above 222 alive, get out through 226, 228. I'm at least looking for the upper end of the range as the next opportunity to sweeten the pot sufficiently to bring in stronger handed sellers. Okay, any questions about crypto? Let me know. There was a stock request from yesterday. If you want to do that, let me know. But meanwhile, other markets. So these are going to be just snapshots ahead of CPI. Just taking some snapshots. The CPI reaction is going to be more relevant, especially in context to this pre-CPI reaction. So we've been tracking currencies, or tracking the dollar as potentially topping. We tracked it prior, it made it through this prior opportunity. But here's another opportunity. If the euro can do it, the pound, I mean, that's not even a warning shot across the bow anymore when they haven't taken another shot, but that has cycled through too. You can see kind of inverted head and shoulders. Enough parallelism here to qualify. It's there if buyers can trigger it. Aussie, not playing along. So very, very diverse counterparties to the dollar. If they're going to sync up, they're going to sync up when they're very diverse. Silver, inside day yesterday. It there's a setup inside days that are biased in one direction, tend to reflect counter trend sponsorship. So to the extent that yesterday's inside day trended down, it definitely opened higher than it closed. By implication, it closed lower than it opened. So if that's counter trend sponsorship, then that's bullish. But I'm kind of on the fence here. It's not a new pattern. Lower high in the afternoon, lower low. I really want to give that a benefit of the doubt because we've been looking at this pattern as being a low. The question is, how does it say goodbye to this area? It had an opportunity here at 31 to kiss 31.11 goodbye on this, therefore, premature breakout. It had an opportunity to basically backtest the proxy for that. Not back down into the range, but toward it. So it's a little weaker here overnight. Again, this is just taking a snapshot. Taking a snapshot ahead of CPI. Sure like to see a knee-jerk reaction back down in here, maybe engage with this uptrending support. You know, it is just a corrective bounce at this time. We're not looking for this up leg as significant, as substantial as it should ultimately be, not to resume the rally yet. Gonna need to cool down a little bit. Same thing for gold, which isn't waiting at all, but this break higher on Monday went out overlapping the upper end of its range, leaving a gap beyond all prior highs in that sequence that wanted to be retested from below. And that's neutralized, by the way, because it was actually exceeded. And then overnight actually trended up or extended even further to 27.41. So basically extended the rally. This is a quasi multi-session range. You know, the question is whether this is a breakout day. It ends back in the range, but it creates unfinished business above. So to the extent it's a breakout, yesterday is a confirmation requiring a third eventual higher close that's potentially going to be delivered immediately, unless today closes negative. In which case, I've actually got a sell signal here under 27.12. That would put us right back into the range. Pretty big sell signal. It's not going to mess around. I don't think it tests the lower end of the range, but back into the range anyway. Otherwise, we'll be looking for today being a eventual third higher close. All right, long bond. We've had a bigger picture, just to go back to December. Not the front month any longer, but on the way down for weeks, months, had a 116 handle target, which was thoroughly tested. Never attracted reinforcements as bottoming behavior began, and buy signals ensued. So bigger picture, we're testing resistance. Back to March. That is, we're looking for this to be a bottom. So the weakness, current weakness, back to the lower end of the range here. The assumption is that this is just a temporary pullback. Again, knee-jerk or defensive posturing ahead of CPI, PPI. The absence of news having already extended the rally, just cooling its jets. That's not a technical term, by the way. This is going to be, now that it's probed and not as a one-off, this is going to be the important pivotal line in the sand, just structurally. This is a structural level. Knowing this is its last touch and its break means this is its last relative high. $119.16, $119.18. So basically a knee-jerk reaction to CPI that blips up into this area has to maintain its recovery, or else there's a deeper pullback and a threat to the bottom. By the same token, no bullish reason for a lower close today. Maybe this, we'll look at the pattern, maybe there is, based on more news coming out tomorrow, PPI, but generally no bullish reason to close lower today. And then crude oil, long-standing target outstanding, one more target down, 62. I mean, the trend could continue, but pretty critical to this range that the lower end of it be tested before it produces a durable, before it can produce a durable recovery. So, I mean, there's just a number of things, I'm not going to leave these on the chart, but just to remind, there's a number of things that are standing in the way of a recovery. There was a reaction here, maybe there's going to be another reaction here. We're already up a buck overnight to 69.62. Gonna need to do a lot more than that before any bounce here is bullish. This island-like pattern, it's certainly an island compared to recent price action, but it's overlapping prior lows. So it's disqualified as an actual island. Islands are made to be retested eventually, but there's a gap fill. There's a lot of attractions anyway back down that suggest this is just a detour. CPI doesn't impact crude oil typically, so it's not that. So I'm a little concerned that crude oil is stronger in anticipation of or awareness of maybe things getting back out of hand in the Middle East. Seems to be some geopolitical risk premium, something. I don't think OPEC's in the mix anymore. Anyway, we'll come back and look at that later today as well. So, any questions, let me know, but be back here at 9:15. Good luck today. link to the strategy planner we just did. Drop the link to it in the chat, the YouTube chat, if you're interested in watching it again, any part of it specifically, or if you weren't here for it, if you're a subscriber, you get it mailed to you. So we're not often at such potential pivotal turning points. So the strategy planner is not often that long, as we just did a half hour. I'm just several things coming into play today, like the criticality of the report, the catalyst of the report coming out today. So again, any questions at any time, please ask. If you're in the YouTube simulcast, still welcome to poke around, literally. See you at 9:15. link in the chat. If you want to email me, I will send to you this morning, just this morning, the same email alerts that members get. Same time, same list. Just for the morning though, you'll have to subscribe to get anything any later. But I will send you the same information, content, etc. that subscribers are getting through the morning. And some reference info that might help. Also, what would help is go ahead and send me any questions or ask questions right here. Let me also point out, just so you can see, here's basically, or just the basics of what subscribers are seeing. So this is the vidiDesk. This is the, this reloaded? Okay, so this is the dashboard, call it, where members log in. We just mailed out the pre-open plan. Links, convenience links. If you're watching the video, there's the video. There's, if you want to jump forward to the crypto section. Put a description, just bring you up to date. Here's what happened to yesterday's close. Here's the overnight update since then. Any patterns? Yeah, we got a breakout confirmation. What does that mean? So what are we looking for today? A little more developed of a section for the strategy planner than intraday. Intraday more actionable, but still, here's the two actionable, or two directions, and any actionability we can foresee. So just a very handy reference point, relevant levels. And then the bias parameters. These are on the 3-minute chart on the left. Wednesday AM bias. And the schedule. Here's this morning's schedule that you'll be seeing. We just did the morning planner, pre-open planner. That's the mailed, get it mailed. Meet back here at 9:15 for the last minute update. So yeah, email me and I will send you the email alerts that subscribers are getting that I just showed. And some other tactical stuff, references. But at any time, ask me any questions. Let me show you how the subscription can pay for itself. That's the whole point of this exercise. I get enough attention at home. Thank you. Let me give you some. See you at 9:15.
you understand that?
Can you just turn it off?
Madam, we don't live in authority.
I have been advised.
Well, whoever advised you is wrong.
Right, well, can you turn your camera off?
How dare you point at me and tell me what to do? Madam, you don't just tell people what to do. You're a PCSO. This isn't Nazi Germany. This isn't North Korea. You can't just tell people what to do. Excuse me. Look, I'm a member of the public. You gotta respect me. I pay your salary. Hello, this madam's trying to tell me what to do, and I'm very offended.
Why are you shouting?
Because she started shouting at me.
Alright, okay. Can I help you?
No. I don't want anyone to help me. She started telling me what to do.
I would like you, please, to stop filming. The reason I'm asking this is twofold.
Yeah.
I'm appealed to you as a human being
Okay.
for moral decency, because our families into this.
Yes.
Does your family, would you like it? Or,
This is going to be all over the news tonight.
okay, right.
Pictures of that all over the news.
Would you like it?
Would I like what?
Appreciate it.
Well, I'll tell you what, because he who controls the questions controls the answers, yeah? I refute your question, and I'm going to tell you that regardless, do you think 9/11, 3,000 people's families all over the news?
Yeah, we want to get to it.
You can't make me stop filming, can you?
Wait, well,
You guys can't stop me filming.
at the moment, if you look there, there's an investigation going on.
There is a crime scene investigation.
Potentially, at this moment in time, you're capturing something they might have missed. So in a minute, under PACE, Section 19 PACE, there might be criminal offence thrown to it. I can seize that camera.
You have no idea what trouble you'd be in, sir, if you tried that. I'm a member of the press.
That's so
Are you threatening to take my...
right, is it?
Yes, it does, because this is a free country, sir, and you guys have no right to tell me...
It's an officer.
Sorry?
Should we not get the investigator on?
You can bring the SAS, it doesn't matter. I'm a free country.
Talking about,
It's a free country, mate.
what we're talking about, right?
Yeah.
This goes on YouTube or whatever you're going to do with it.
It doesn't matter, because it doesn't matter what I'm going to do with it.
Right? Put it on
Yeah.
YouTube, crack on with it.
No, I don't need your permission. I'll do whatever I want with it.
They're not giving the permission.
No, but you're speaking in an authoritarian manner.
I said, what's my role at this moment in time?
Your role is to protect the crime scene, not to argue with the photographer on the side of the...
You're helping us by capturing something
Dude,
to that camera.
forgive my French. I'm not going to swear, but that's utter bollocks, and we both know it. It's utter bollocks. How can an amateur little camera...
Have you got nothing better than your time this way? Have you got nothing better because you're not even filmed that before you leave?
Yeah, because the story has changed.
Are you here to cause trouble?
There is no trouble. You guys please leave...
the open, we've got favorable reaction to CPI. We can certainly take this for granted that at least yesterday's drop was partially anxiousness, not necessarily paralyzing price action, but in this format, discounting, defensively posturing for the CPI, so that from a contrarian perspective, it is overly discounted, getting favorable reaction or favorable headline, and suddenly seeing it's overdone. That doesn't dismiss that yesterday's drop did confirm a breakout that requires an eventual third lower close. So the question is whether this session long rally setup is going to control the session and delay a lower close, or, and to what degree, or whether this is just the detour right here, right now. Because it's 9:45 that has to be exited above yesterday afternoon's high for the PM bias window high at 60, 56, or 60, 65. It's the first 15 minutes, the first 15 at 9:45 that needs to lapse higher. So at least as of 9:45, back under 65 would be bearish. We'd assume the bias up signal doesn't plan to trigger, and maybe the bias up target will have been tested. Rejecting it would be, let's say, super bearish. Anyway, so we've got that on our radar. But also the setup, the session long rally setup, initially requires exiting the first 15 above that afternoon high. It then also requires recovering through 9:45 every other prior high that's being tested. So post open, by the way, between 9:30 and 9:45, what prior high is tested? Right now, for instance, this actual high from yesterday is being tested. That's not relevant unless post open touches it too, in which case that's the new threshold. No longer the bias window high, the actual high. That's what needs to be recovered through 9:45 if it's touched, or if only this were touched. The noon hour high at 60.69. If only that were touched, or that were only touched. If this were, anyway. If that were touched, which it's probably going to do, it looks like, post open, then it better be recovered through 9:45 to fulfill the session long rally setup. The minimum was yesterday afternoon's PM bias window high. Don't be assured of anything. But right now, we also have a 5-stager trading aggressively into a running correction that resolves aggressively. Are we going to hover here and plateau into a stage 4 so that there's an attraction back to 66? And when does that develop if it does? If it hasn't developed by 9:45, it won't. If we're not reacting down by 9:45, I won't look for a reaction down today. Not from this. So near term, back under 60.70 would be the nearest sell signal. Whatever that might entail. As far as getting involved on the upside, any fresh high in here above, call it 77, get a little bit of room for noise. Nothing immediately actionable other than to sell into strength with a tight stop. I'd consider selling strength with a tight stop. Anyway, any questions, let me know. I'll be right back. so we shall see. We shall see whether stage 4 needed to actually plateau, spend any appreciable time up here to qualify as stage 4 in a 5-stager setup. Five-stager setup right here. Also, you can follow the link to the knowledge base in vidiDesk, and look it up there, knowledge base. Look among setups, there's the 5-stager. But we are now checking with the prior highs. The minimum prior high to test to activate the 5-stager is yesterday afternoon's bias window high. That's the high between 120 and 130. So long as there was no higher high before trending down into the close, that's the immediate reference point. And then it's replaced by any prior high touched as well. So here's the noon hour high, and now actually yesterday's high has been touched post-open. Yesterday's actual high, 60, 75, 75, 50, being overlapped here. It is now necessary to exceed 60, 75, 75, 76 through 945 to trigger the 5-stager. Buyers have been so optimistic. Sorry, let me just get this aligned here. Buyers have been so optimistic so quickly, we don't know whether to regard that as actual strong-handed buyers reacting to all of the downside, recent downside, potentially bullish from a contrarian perspective ahead of CPI, or if this is impatient correction, not just of yesterday's decline, but also of, the decline itself in its entirety. Let's just reverse engineer this. Here is Tuesday's low, 61.8% retracement back to Friday afternoon's highs. That's a timing window. That's its extreme. That's a qualified anchor for a Fibonacci calculation. Afternoon to afternoon. So, right here at 60, 77, 78. We also happen to be testing buy signal. Not immediately actionable to the upside. We need to see the first 4-minute high, minimum 4 tick. We're there. 4 minutes of it, or since it. Whatever the 4-minute high is, exceeding that would indicate reinforcements had arrived. If you want to take early action, that's fine. I'm just pointing out where the chart is telling us one thing or another. The only immediately actionable aspect otherwise to this test of 60.77 is to consider fading it, selling it. Take a minute or so to assess it, but even a stop and reverse to long above its 4-minute high. Because this should resolve one way or the other, and it should resolve noticeably one way or the other. Now, if this were to retrace, if this bounce were to retrace 61.8% back to the noon hour high, or the PM bias window high from Friday. Still got a little room up here to 79.50. But resistance, we can anticipate resistance and hesitation there. The ultimate would be to retrace Friday morning's high, gets us up to about 84. Let's see, at 9:45, will that prior high, this is 60, 76, 75.50, will that have been exceeded through 9:45, through the first 15? We're now interested in the last relative high, because that's being tested. And by the way, if buyers don't bring it, this is the point to considering a short. If buyers, as of 9:45, at the end of the first 15, which we're halfway through, if buyers don't bring it, maintain it, let alone extend it, and have retraced down, not overlapping, but detached, already reversing down as of 9:45, that can be as bearish as this would have been bullish. Not necessarily a session-long decline in its place, but we consider the consequences. The consequences to leaving behind whatever attractions below, and assume that they were on their way. So, right now, until 9:45, I have a new sell signal. After 9:45, depending on whether the session-long rally setup has triggered, this sell signal may or may not be intact. Alternatively, again, fading this test of 60.77, stopping and reversed along, especially if 77 were recovered through 9:45. Question, why does the dashed horizontal line on the 3-minute not match the line on the 1-minute? They are separate, thank you. They're separate points. There's actually a couple of dashed lines on the 3-minute. They represent the last relative high. The minimum relative high yesterday's PM bias window high, just to consider the session long decline set or rally setup. But since the last relative high being touched intraday is post-open, that is yesterday's actual high, that is now the line in the sand. We really don't need to be distracted by that. As far as the 1-minute charts dashed line, that's just the room for noise going back. Let me get it there real quickly. Come on. So this is some prior resistance of a pattern, higher or prior highs now. I can reinstate that later. interesting. Let's see what I can do here. It was okay yesterday? Let me ask how this is. Is this any better? Is that right? No, not for you. Let's keep looking around. So by the way, just to point out, as we get closer to 9:45, getting closer to 9:45 and still not reacting down, like we're within a couple 3 minutes, I wouldn't be surprised by a very last minute or almost last minute reaction down. But just to point out, if 9:45 comes and goes without rejecting this test but still overlapping it, then session long rally doesn't play. Thank you. Glad to hear that. I will be posting a link, if you haven't seen it yet, to a pretty hefty discount we're doing, if that's of interest. All right, coming into the 15-minute window. First 15 is, here we go. Well, 1 minute's a little more, but the prior relative high, yesterday afternoon's prior relative high, right here. Let's go ahead and get that dashed line above 75.50. Or 75.25, the actual high. Decisive, detached, complex. There's a probe above it. There's a dip back toward it. There's a bounce to a fresh high. So we know this dip is done. It could be probed again, but it's a different dip. And it didn't touch the prior high. That's complexity. And it's 9:45. Keep it up for the end of this bar, and we've got a session-long rally set up. Session-long rally does not preclude dips. It marginalizes sellers. That doesn't preclude counter-trend price action or dips along the way. Buyers can get ahead of themselves. Also, just as far as the 5-stager, it's now moot. No 5-stager. Entered aggressively, exited aggressively of this running correction. Plateau, perhaps, but not reversing down when it matters. Not reversing down. by 9:45. 9:45, the first 15 minutes, is the handoff from the overnight to the intraday. Whatever the overnight action, that is, the overnight crowd intends to impart upon the intraday, has to have been embraced during the open by the first 15 minutes. So that 5-stager needed to have already begun reversing down from its plateau into stage 5, which, by the way, would have been relentless. Oh, spoiler, it was saving. It didn't happen, so if we dip now, it'll have nothing to do with the 5-stager. Instead, we're at a session-long rally setup. That doesn't mean anything as far... And by the way, if you faded the test of the inflection, the stop, it doesn't make sense without a stop. That's the whole point to it, is it's so close to where you'd know it was wrong to be short. And the only way that makes sense is to actually cover. In this case, reversed along, if that 4-minute high were exceeded, which it is. So if we're crossing through, well, now we're coming into, just getting a little ahead of me, but really just back to what I was discussing. We'd made it through a couple of 61.8 retracements, apples to apples, late high to low, PM bias window, noon hour high to low. Here's the ultimate, that is 61.11, Friday morning's high to yesterday's late low. There's the 61.8 retracement to about 60.84. Now basically, for all intents and purposes, touched. So that's normal resistance, natural resistance. A response to it wouldn't be surprising. Unless it's totally undone through the bottom of the hour, then we would anticipate any pullback to recover. And by the way, the extension higher highs that we would expect above 60.84 are basically 60.90, 60.94. So here comes resistance, or the response to resistance. Pullback limit is 60.80, 60.80. If you want to tighten or lighten, it's a 61.8 retracement of a high to low. Probably going to be some interaction there. So if you're just trading a contract or two or a unit or two, maybe you need to take advantage of that. You can always re-enter. If you're trading multiple units, tighten stops, lighten exposure. But this is a pullback limit, so it's allowed 4 minutes of detouring back under it. That's the usual attention span of weak-handed counter-trend sponsorship during the first hour, 3 minutes any other time of day. Here's the 3x3 cheat sheet, basically. We're looking at 4x4 in the morning, minimum 4 ticks to start the countdown. If the pullback limit is pierced by 4 ticks, we start a countdown. Not all 4 minutes need to be spent under the pullback limit, just counting down 4 minutes to know where the 4-minute low is. And if we get the opportunity to buy it, or within 1 or 2 points buffer, room for noise, there's no guarantee, but the likelihood historically is that we're going to retrace the origin of the dip, perhaps resume the rally for other reasons. and it's not even being touched. Doesn't have to be. Might not get that opportunity. So, yeah, we kind of have a partnership. I do the charting. I give you color on what are the likely or potential outcomes, labeling them as such, and updating as things develop. And have a few tactical approaches that you can learn. Some people come in and they just want to see the relevant levels. Others, some execution ideas. I offer coaching calls included. On any aspect of your trading or the analysis. I also teach how to apply Fibonacci and different values to the chart. What goes into the expectations? So I'm going to get a little bit more aggressive on the sell signal. Not much. And not now, but we will be getting more aggressive on the sell signal as there's more room in here for the corrective dips. But they will be expected, or they'll likely be just temporary corrective dips. Not everybody wants to trade that, but I'll still chart it. All right, we're going to restart the live transcription that I paused yesterday. Keep in mind that it doesn't necessarily catch everything, and it certainly doesn't necessarily catch everything literally. But it might be a handy reference. In fact, just looking at that first transcription makes my point. So, just to assess here as we come into the top of the hour, the second 15 minutes, which is a thing. I'll cover that in a moment. This is the 61.8% retracement, low to high. It is a herd mentality that doesn't realize it's being manipulated by its own perceptions, but it is. It can be responsive, influential, in other words. Price can respond to it. Look at how it this level just suddenly reaches out from nowhere and stops price. And it's not like we weren't anticipating that as well. It's how price behaves that's predictive from there. And I can point out what price needs to do to have certain outcomes, specific outcomes that is. The pullback limit is now 60, 80, 75. So the 61.8% retracement at 60.84, clearly influential. Its recovery likely to be productive to the river Styx calculations. 60.91 and 60.94. I don't think the big reward here is buying for a break higher, but buying a dip for a recovery. And pullback limit should be 60, 80, 75 now. So the 3x3 test, or 4x4 during the first hour that we are in, applies to any inflection point, any short line, red, blue, or green. It's an inflection point. And probing it tests the usual attention span of weak-handed counter-trend sponsorship. It's also supportive in itself. But if we get an opportunity to identify a 4-minute low, minimum 4 ticks to start the countdown, 4 minutes later, look back and see what was the 4-minute low. All 4 minutes don't need to be spent probing under it. But if we get an opportunity then, maybe by the 4th minute, a bounce will have left what was, say in the 2nd minute, the 4-minute low. Not 4th minute, 4-minute low. We can always set a limit buy down there. Even be a little more frugal with a 1 or 2 point buffer, room for noise. Being the usual attention span of weak-handed counter-trend sponsorship, we would expect it to hold its test as the likelier outcome and have a stop in place if it doesn't. And that's the whole point to it. Not that it is any likelier to recover after probing the pullback limit by 3 or 4 minutes. The usual attention span of weak-handed counter-trend sponsorship, it might be, that helps. But because if we can buy at the low of that window, it's so much closer to where we know it's wrong to be long. It's just a very cheap buy. It's a bargain. It may sit in the basement for the rest of its natural life, unused, but what a bargain. But you have to be able and willing to take the stop, and that means a resting stop. Just can't rely on having the time, the reaction speed, or the resolve to act on a break below the 3 or 4 minute low to testing the pullback limit when you've just bought and have the highest of hopes. The stop is what makes the profits work. So that's tough to do, especially if you're not confident that overall these setups, which are the reasons why we would want to buy dips, because those are what point higher. The likely resolution to breaking 60.84, to extending to 90.94, to recovering that the pullback limit low test of the usual attention span of weak-handed counter-trend sponsorship is usually 3 or 4 minutes. If you don't have that degree of confidence in the underlying system, then that pullback limit may as well be arbitrary. So clearly it's not arbitrary. Price stopped right there, but it also didn't give us an opportunity to count down a 3 or 4 minute low. And sometimes the 3 or 4 minute low will have been developed, and by the end of that window, we're already doing this. But here we go, probing 60.84. Let's check RSIs, not good. RSIs are not making higher highs with price. In fact, at this moment, 1 minute RSI is diverging negatively. Where RSI was overbought on earlier price highs, price being higher is not yet taking RSI back into overbought territory with it. 3 minute RSI isn't much different. It just takes one holdout, like a jury. So, tighten stops. I don't know if it's so much a reason to lighten exposure. Again, so closely to the last decision. But at first, negatively diverging RSIs, and they're not simultaneously negatively diverging. 3 minute is kind of on the cusp. But they're not both overbought. And simultaneously overbought 1 minute and 3 minute RSIs require a retest. Simultaneously overbought 1 minute and 3 minute RSIs require a retest. Pullback limit is now 82. Simultaneously overbought 1 minute and 3 minute RSIs require a retest. Or oversold RSIs, for that matter. So they're not, when they diverge, when one or both diverge negatively, that's not a sell signal. It's constructive to a sell signal if other elements were to develop. It is at first a call for reinforcements. Buyers are calling for reinforcements here. Drag price higher, or push price higher and drag RSI back in overbought territory before the interim low can be probed. That's another element of a sell signal. And it is sell signal, not soul signal. Google Docs is not intelligent, artificial, or otherwise. So the question, how do I get the pullback limits? Is that part is complex and proprietary, reduced to a single basic calculation. It's all relative to the last pullback or distance between prior pullbacks, depending on what sort of a leg we're dealing with, and the age or longevity of the leg itself since the original inflection. Those are two different things. So not getting any great pullbacks to add, but getting through one price point, one Fibonacci scheme into another. 60.90 is the attraction, 60.90.25 to be precise. Already within a point, think of it having a force field that starts being somewhat as much a repellent as an attraction, depending on who's doing the approach. Pullback limit is 86. And I'm intentionally very far removed, really relatively speaking, from current activity in my sell signal, because that is how much room there is. So long as there's no deeper pullback, this is an ongoing series of higher highs and higher lows. It takes a lot to reverse that. So I do want to point out how much selling pressure is able to be expended without it yet reversing the trend down. All right, so there's 90.25. That is resistance. Now it's going to be interesting to see, and I'll move this forward, whether that is resistant or if this extends to its counterpart at 94. But 90.25 is met. And I promised, boy, this transcription is on the blink. Pullback limit is 86.75. So right now, the bias is kind of irrelevant, but not. Does that make sense? Good? Okay. No? Okay. So the bias is kind of irrelevant because there's the bias up signal. There's the bias up target. Post-open action never even touched either. So, what good is it? Well, it's still a window. This is still a bias window. The influence of the window still persists for the next hour. Also, if met, don't think it can't be, but if met, the bias up target, because it was exceeded through 10:15, this is a renewed bias up, not just bias up. The target, if tested, is likely to define the lower end of the window. So the bias in this particular instance this morning is relevant, but it's not. So there's 60, 90, 25, the beginning of the room for noise above the 61.8 retracement. Everybody knows the 61.8 retracement, high to low. I have a couple of other techniques that look at the prior high, the prior low, pivotal high and low, in other words, those being the anchors and the connectors. That can be a little more precise because the crowd or the portion of the crowd, the herd that's causing those levels to form, can actually be more influential. But in any case, just a very simple 61.8 high to low. Friday morning's high to yesterday's low, 61.8% retracement right here at 84. Actually taking the 61.8 and the 38.2. The 38.2 was at 60.67. Taking them, they are counterparts of each other, and projecting out the 38.2 and 61.8 from them, that is what I call the river Styx. That's tough. Not everybody wants to step through that. There are consequences to it. But they are influential, the banks of the river Styx. So 60, 90, 25 could not have had more telegraph to it. And here's a response. Minimum 4 ticks. Counting down to 4 minutes. Some people's trading plan doesn't include buying off a target. Target's a target. But we do have extenuating circumstances, this being a session-long rally, that there is that underlying likelihood for higher and higher highs. So once we know where the 4-minute low is here, which might be 85, let's say it's 85, 1 or 2 point buffer, room for noise, which in this particular pattern actually works out to 84. We may never see 85 or 84 again. But a limit buy in here, say at 85, 84.50, after we're assured or confident that's the 4-minute low. 3 minutes after the first hour, any other time of day. Has a high degree of likelihood that that was just the usual attention span of weekend to counter trend sponsorship. It may already be that anyway. But also giving us an opportunity to exploit that. Not because it's any likelier to recover. Only because it's so close to where we know that's wrong. I'm much more concerned with where I'm wrong than where I'm right. The system is already developed. I certainly tweak it occasionally by constantly observing its performance and results. But as far as the tactics, every trade is different. And so the market, even with the most confidence-deserved system, the market is going to try to thwart it whenever it can. You can always re-enter long, but it doesn't make sense to try to get in cheaply where we know so closely where we'd be wrong to be long, unless we take action when we're wrong. And in this case, I'm allowing room down to 84. Under 84, I don't want to be long. Under 84, I want to be looking for another place to get long. Maybe on strength, something else develops. So if you've got a stop under 84, it's triggered. Might consider getting long back above the pullback limit itself, back above 86.75. This may be nothing more than having been whipsawed out. Look at how there's all these errant ticks, sentiment extreme under 84, not even being overlapped. We just don't have control over that. We can only go with the probabilities. That means averages sometimes. Sometimes probability only means averages. And a wide range can contribute to that average. But that's why we also have a tactic to get involved again if whipsawed out. Also, as I said, even though the next higher attraction is 94.25, if it's even in play, I suspect that now that the maximum target or the likely target area that I described earlier is met, that the market's going to take a little breather. Remember, it's not necessarily extending the buy signal that is the most profitable play on a session-long rally. It can be buying the dips. Because we know as a session-long rally that every timing window is going to form a high, and the next timing window is likely to probe it. Often with one exception. One timing window often doesn't do that. So, and that can be done during a timing window. Like here's the bias timing window. Kind of on the cusp here. But a pullback can be pretty significant. We can find a place to buy it knowing or having a degree of confidence that a fresh high is coming. So if we look at the risk reward, I wouldn't base my risk off of that potential reward, but it's compelling. I would like to see a higher high since 1015. Pre-1015's high, even if it's a renewed bias up, it would certainly be helpful to add confidence that the trend intends to persist. Even though we have the setup, we don't have a guarantee. But this is the 3-minute low, 4-minute low, 1 or 2 point buffer room for noise, and a sentiment extreme. Still attractive to take a stab at getting long, even if stopped out a little bit lower. Just because we have that extra information. I wouldn't sit around doing that all day indefinitely, self-whipsawing. But with the potential that this was just a whipsaw, this excess, or buy stop as price tries to prove that out. We filled it out a little bit. So fresh high here above 86, or the pullback limit at 86.75 probably is renewing the upside. I'm going to go ahead and identify a sell signal. Whether you take it or not is everybody's own trading plan, but I do want to track. I need to track sponsorship and be able to identify when that sponsorship is losing its own traction so we can be that much more confident in a buy. Right now, the 3-minute low, 1 or 2 point buffer room for noise. And a little more information. I'm raising the sell signal to 82.25. Sell signal is support. That's why its break would be so relevant. So you can fade the sell signal. Just like we initially considered fading the buy signal till it proved that it was attracting reinforcements. So raising the sell signal to 82.25. And I don't have any projection on how deep of a pullback. So there's no actual target for the sell signal. Not in terms of price. All right, so I'm going to get this in the blog. Any questions that I haven't yet addressed? I think I have, but let me know if not, and I'll be back shortly. And to your point, I'm just getting to this point about the pullback limits alone seem worth paying for. Thank you for that. And it's not just the pullback limits, but also applying the 3x3, the 4x4, or 3x3. As a member, you can chat with other members. And be able to see... I can just tell you, I'm not going to disclose anybody's personal business. I let them do that, and some do, very sharing about what they do. There's a couple of people I'm sure would come out of the woodwork if asked who that's basically all they do. Couldn't care less where the market's going or why. Just close your eyes and do the 3x3. I usually post that special offer when the bias window's lapsing or by noon, because this is just for the morning. This room is only open for the morning. But if you want to get a head start on that, there it is. Be back shortly. By the way, this buy signal is 87.75. I'm sorry, the Fibonacci scheme is 87.75. I'm padding it by a tick. In this case, based on some other price action in there at 88. Actually, I will start tracking it as being in play when it is pierced by at least 3 ticks. And just real quickly, I'm going to go ahead and point out, it's going to be in the blog, but just to describe also, I had mentioned that the first half hour, the second 15 minutes had some clues in here. I don't care what the first 15 minutes did. Trended, flatlined, went back in time. I don't care. I just want to know the range. And then I want to know if the second 15 minutes did anything, what it did versus that first 15's range. Did it probe it? Did it maintain the probe? Which direction, of course? Did it probe it and reverse to the other direction? In this case, the second 15 minutes ended above the first 15 minutes. That's trending. It's one hand clapping, but it's trending. Now, that's the first half hour. The first half hour, therefore, trended. Did the second half hour trend also? Well, I'm glad you asked. The second half hour ended officially at 83.50. 60.83.50. At or under the first half hour's highs. Not by much, really just testing. So just overlapping is enough to say, yeah, it probed it, but it didn't maintain it. It's a warning sign. Just be aware. I can now look at the first 15 minutes range, identify a 61.8% retracement of the first 15-minute range of its relevant price points. That's going to be an important line in the sand. So that's basically a very important price point at 60, 74, 75, 60, 75. I want to consider getting long at 60, 75 if given the opportunity. It's a pretty important support. Like I said, I don't have a target for a sell signal because we've got a bullish session. But pullback limit candidates, if 60, 75, 76 were being tested, I'd consider buying that. If I sold under 60.82's sell signal, that would not be a target to compare risk to because it's not necessarily in play. But there's potential to test it under 60.82. So this is not to say we're getting there. It's to say if we get there. Similarly, just for reference sake, 61.8 retracement of the first half hour in its entirety. Because these are going to be supportive. 60, 79, 50. That might be all that. If I sold under 82, touched 60, 79, 50, and bounced back above 82, I'd be concerned with being short. And I'd consider getting long. So the market gives us a lot of insights. That doesn't mean they're ever going to be useful. We all have friends like that.
We listen anyway. All right, I'm going to get the blog updated, and I will be back shortly. Oh, I'm sorry. Trying to figure out what to do with collapsing expirations on the 20th of December. I'm assuming, if I heard your morning pre-plan correctly, this could be an opportunity to lighten exposure. Oh, I'm sorry. Call options. Long calls, I'm assuming. So, long premium on those? So target number 1, 90.25. There's some higher prior lows from Friday that are being tested, naturally resistant. Again, I suspect we're going to be testing the entirety of this. I tell you what, if you could formulate that question from the beginning, pretend I haven't seen anything of it. I'm going to go update the blog and I'll be right back. All right, let me know if you're ready for Bitcoin. I mean, we should take a look anyway, but let me read through this. So long call options in the money on Bitcoin with 12/20 expiration. Should I be lightning exposure? Yes, based on understanding of the pre-open plan that this could be a correction to new highs, not a bigger rally. And that is the question, and this current reaction hasn't resolved it. So it's trying to. I mean, these are some big developments. Is this just the wake of the CPI reaction? Well, this is Solana, but that is, let's start with Solana. That's potentially bullish. At this point now, the sell signal is back under 225.50. Bitcoin, potentially bullish. Is this a double bottom? It's not a durable bottom. When we see two spike lows on a double bottom, it's not a double bottom. Still productive, but you can see the inflection. We had identified 98.8 as pretty important, 98.6 or 7 before that. But you can see how the market perceives that as very inflective. It's a knee-jerk reaction, or at least it's in the wake of news. So it gets we can give it every benefit of the doubt for the hoops that it jumps through that are available to be jumped through. So for instance, that's a hoop that it's jumping through. Not just recovering this area, that's one hoop. The behavior that suggests inflection, that's another hoop. Unavailable yet is a third hoop, and that is to maintain this for a 24-hour window. And by the way, to maintain the recovery above anything relevant that's touched. The inflection point has extended to touch this last relative high, and now that's the relevant threshold. Its recovery needs to be, having been touched, needs to be recovered, but then maintained for a 24-hour window. So that's the burden of proof here. There's a lot of prior highs in here. As a trade, is it a spot? Is it resistance? It absolutely is resistance. "24-hour window maintaining at least the recovery above this inflection, 98.8. Preferably also anything that's probed above this last relative high, above 100,500. We do have a sell signal, anything lower, pretty much, under 98.6. Let me extend on Solana. Here's the relevant resistance. Not only this inflection point, but just to retrace the upper end of the channel. If the upper end of the channel is actually touched, and I'll get this little bit less prominent. Touch the upper end of the channel, which currently coincides around 240. And at that point, 236 would be support. The only qualifying factor is that this is the knee-jerk reaction to, or at least empowered and extended by the knee-jerk reaction to the CPI. Relevant resistance right here at 230.50. Got to get through 230.50 as you state, but not to new highs, to the upper end of the channel. All right, so we got literally as close as possible. The pullback expended as much selling pressure as was possible without actually reversing momentum down. Same thing on the bounce, as much as possible. It's been pierced by a tick or two, but not even by 3 ticks to start the countdown. So this is not necessarily counter trend behavior. But it also hasn't necessarily resumed the rally. Still in a holding pattern. I had a question regarding the session-long rally rules, and I'm sorry, I need to get that card back up. Oops. All right, session long rally rules. If in the next hour price does not exceed today's regular trading hours high, 60.90.25, would we expect that every timing window for the rest of the day would at some point be higher than 60.90.25? That's the likelihood. That is the likelihood, and even more so if one of those timing windows probes higher, that becomes the new threshold. Replace 60.90.25 with whatever that higher high was. That's the default likelihood. So let me just point out something. I want to make sure it's clear from the blog. You know, the afternoon prior to a high-profile scheduled announcement is often paralyzed by anxiousness. That's the default that more current information can inform and adjust. But when we look at the calendar, that's our baseline approach. See if something else matters. Tomorrow is PPI and something else matters, and that is CPI. They're always a 1-2. But it's interesting, when one reacts favorably, the other tends to anticipate that. That doesn't mean that tomorrow's PPI is going to react favorably. I don't know how it's going to react. I need to see how this afternoon does. And here's the point. Because CPI's reaction extended so far beyond, remember we talked about the second 15 minutes? And how that indicated the first half hour trended, and then the second half hour went out at least flat to higher, having probed higher. In other words, that's optimism. Could have just gapped up 1,000,000 points and flatlined, and that would have been bearish compared to this. This is actually bringing in post-open buyers through multiple consecutive timing windows. I wouldn't be surprised to see the afternoon do the same thing, regardless of the session-long rally. Regardless of the session-long rally already indicated, here's at least another reason, totally separate reason. Totally separate reason, there we go, for the session-long rally to be plausible, reliable, is the potential that the market front runs this afternoon a duplicate reaction to PPI because CPI's reaction was so optimistic, so productive. So had CPI gapped up and flatlined, we wouldn't be having this conversation. We'd actually be anticipating that the PPI reaction is, or that the afternoon ahead of PPI flatlines too. And if this were a busier calendar this week, we might not be having this conversation. But there's really just two influential reports, CPI and tomorrow's PPI. The market is focused on these and not distracted as far as the extent of other reports. So if not just this morning having trended up, but I'd like to see something into the afternoon, into the noon hour, that is. But extending higher is on the table. We're not taking it off the table at this point. I'll certainly have pullback limits to that and sell signals in case it doesn't develop or inverts. Confirmation. I mean, flat to higher at a shallow slope is the same thing as rallying sharply for that purpose. So we'll have signals that try to anticipate either. And if you're in the YouTube vidiROOM and you want to be available this afternoon, you want to be present for any of that, because the YouTube simulcast ends at noon, maybe a little bit into the noon hour, but ends at noon. There is the link. If you look in the chat, there's the special savings offer. I'm going to drop it in there again. There we go. Special savings offer. Extra special, as I described on Dr. Tennant's channel yesterday. That'll immediately grant you access, full access to vidiTrade's site and service. And you can log into the vidiROOM. No latency like there is. I'm sure there's latency to, and I can see, I've seen it before, to be in the simulcast room on YouTube. So if anything develops this afternoon, give you a head start on being able to look at the supporting documentation. Any questions I can answer about that, let me know. Or anything else about the service. So the pullback limit is 60.8950. And by the way, the reason that I've got this mark, this is actually the proxy gap. We gapped up. I call this the proxy gap because the gap from yesterday's cash session close, 60.4750, to today's opening print, 75, whatever it was, 75.50. There's this is the proxy for that gap. We don't have to actually extend back down to 48 to fill its gap. The proxy for its gap, the 61.8% retracement at 58.25 could be tested. But also just the power, if we're not going to retrace, that's because the power of that gap is still running. These are its projections. 61.8 is a likely projection. That's now met at 93. We're still, for other reasons, totally separate reasons, looking at 94.25. This is what I mean by a cluster. There's a cluster of objectives up here within a specific area, specific numerical range. It's a dynamic range based on some other inputs that make it current. But we're in that target area. 94.25 might not be met. The cluster of resistance may become resistant before it gets a chance. We never touched the sell signal on the second try. But we now have a counterpart. There's a counterpart to that projection, the 86.25 projection, 10 by 2 ticks. So adjusting the sell signal to 85. And by the way, there's our fresh high for this bias window. The AM bias window has now produced a fresh high, probing its prior timing window's high. Not that a timing window was required to retrace. It could just flatline. But there is an exception allowed for one timing window not to probe its prior timing window's high. So, Lewis, just getting back to this question, sorry I didn't say it earlier. Correct. There is a platform. I use Adobe Connect. And that's what you're looking at is the Adobe Connect. So there's some latency here in the YouTube simulcast. But as a subscriber, you get a direct link to the Adobe Connect platform and also to the website. Pullback limit is 60.92. There's going to be some consequences to discuss. With the pullback limit now 60.92, because we're probing now the other bank, the complete reverse sticks is being probed, which is relevant but not relevant. It's one thing to probe it, it's another to maintain it. What does maintain it mean? How do we know when it's maintained? Because the bias window will have lapsed at noon, either maintaining it or not. And overlapping it is one thing, or a separate thing. Retracing it substantially enough to be counter-trend sponsorship. That's something else too. And then there are specific behaviors to anticipate. But we'll have something that we'll be discussing here at noon to see how this is resolved. Pullback limit is now 60.92. So as a reminder, the simulcast, the YouTube simulcast, will remain open into the noon hour. And I'm going to, it's just for the mornings, just 2 mornings, yesterday and today. If you would like to participate this afternoon, as I said, I suspect that this follow-through is a function of the optimism surrounding the bullish CPI reaction being duplicated tomorrow for PPI. That might be front loading it. You definitely want to be here tomorrow morning because there's going to be a setup for that as well. But in order to be here after today, after this afternoon, literally past the noon hour today, you'll need to take advantage of the special offer, or you can get on the site. There's an offer on the site. I think it's up right now. I have a sales manager. I'm not sure what she's doing with it. There's a programmer who was rearranging some stuff. You're not going to beat this offer, though. I just posted in the chat here. The site offers is a trial. You just had it. Visitors to the site don't see this offer, which is, it says 3, but as I said on Dr. Tennant's channel last night, I'm making that 4 free terms to the vidiROOM. That's an $800 value. We're also going to be monitoring the session-long rally setup. So I think there's stuff coming this afternoon as well. And we do a market wrap. Today's is a little early, but at 3:45 every day. Today 3:20, but every day 3:45 we do a market wrap. Similar to in scope to the strategy planner we did this morning. So hit that offer now to make sure that you're glued in for the afternoon and so on. And if not, I appreciate your stopping by. Please like the channel. Somehow that translates into something or another for Bitcoin, for YouTube, maybe someday. And I don't know if you're already subscribed to this channel. Subscribe to this channel, and whenever I open it up, you'll get a notification of a free look going on. And regardless of whether you subscribe today or tomorrow or anytime, thank you so much for taking time. Let me be part of your routine today. Interrupt your routine. like to be part of your routine, but I appreciate you taking time to check it out. All right, so it is noon. It's noon. We're entering the noon hour. The River Styx counterpart bank, the other bank at 94.25, still being overlapped as we entered. So not decisively exceeding it into the noon hour. I'll give it a benefit of the doubt that the trend remains up because of the other factors like session long rally. But I do want to point out also, I'm going to get real aggressive on a sell signal because just like the bias window went ahead and probed prior timing windows highs, the noon hour has now probed prior timing windows highs. So let's just examine for a minute, what does session long rally really mean? It requires each timing window to probe its immediately prior timing windows high. One exception. Is this the exception? The AM bias window? Nope, it came in here a little late. What about the noon hour? Is that going to be the exception? Often it is actually, but it's not. It just probed the prior timing windows high. There's an entire noon hour between now and 1:20 that has already neutralized its upside attraction and is free to back off, pull back. The noon hour is free to put in a pullback. So I'm going to get aggressive on a sell signal. Also, it hasn't put in a higher high substantially enough to adjust the pullback limit. The pullback limit is 93. That is still the pullback limit. But it's already been used. It's already been productive. Its test produced a fresh high. So it is now being retested, or now it can be retested again. The pullback limit can be retested again until price extends any higher. But as soon as I know where a 3 or 4 minute low is to testing the pullback limit, I'm going to get as aggressive as possible on a sell signal. Okay, we're just a couple minutes away. If you haven't clicked on the link to open up the special savings offer in your browser, do so now. It's going to disappear when I close the room. I think it disappears when I cut off the simulcast. Maybe it doesn't. I don't know. But the simulcast will disappear momentarily. Well, no, not momentarily. For weeks and weeks. This is it. Last one of 2024. Next one might not be till February. Very busy January. And if you go ahead and subscribe now, you will get into the vidiROOM immediately and participate in whatever or be exposed to whatever trades we identify for the afternoon, as well as for PPI tomorrow. Again, thank you everyone. If you're not going to subscribe, I understand that. Obviously, it's just not the right time. I'm sure you're serious about making money. Being able to just clock in for a little bit. Join the Made Morning Club like a lot of our subscribers who just come in, catch the first trade, make their plan, and I don't know what they do the rest of the day. Or if you're at all erudite and interested in learning, this isn't a black box. Except for how to calculate these little lines, which you'll get you'll start to see, you'll start to know he's going to put it there, he's going to put it there. Except for that, everything is an open book in real time, documented on the site. So, thank you for stopping by, folks. Make sure you follow this channel. That way you'll know when it's open again. So if I don't see you on the site, I'll see you in February. Merry Christmas, Happy New Year. President's Day, Martin Luther King Day, something. There's something in there. double threat here. I want to give buyers every benefit of the doubt that they entered the noon hour. That is, the bias window lapsed above 94.25. It was tight. Probing a little bit higher since then helps. Pullback limit should be 96.50. If the pullback limit were probed for 3 minutes, we could look for that low and another 1 or 2 points buffer room for noise. Anything lower, I'd want to sell or manage short into. While also considering whether that should just be bought. Giving a lot of leeway here. By the way, during, well, this doesn't apply. During the first 3 minutes testing the pullback limit, the sell signal cannot be triggered. It seems like it's far away. It's not. If the next 3 minutes probing under this pullback limit, in other words, the usual attention span of weak candle counter trend sponsorship, if it probes lower and actually overlaps the sell signal, that's irrelevant. The sell signal does not play. The bars, the first 3 minutes testing the pullback limit, are disqualified from triggering a sell signal. Can't be doing both. Can't be testing a buy signal's pullback limit and triggering a sell signal with the same bar. All right, and there was a question on Bitcoin. Question being whether to lighten exposure to a long call. So this is the line in the sand. Lines 98.6, 98.8. That probe needs to be recovered beyond a 24-hour window. Hey, there's another prior high that's been tested, 100,500, and it's not irrelevant, not arbitrary. That being probed needs to be maintained for a 24-hour window. That's really what the threshold is now, thanks to it being probed. So we can look at prices as they're met and know they need to be maintained for a certain amount of time. What we don't know is that certain amount of time, does it reject the entirety of this signal? So pullback limit, it's the noon hour. Minimum 3 tick probe starts the countdown. There's a 4-minute low, 1 or 2 point buffer, room for noise. 92.75 is effectively a sell signal. Remember, the noon hour has already probed fresh highs. No higher highs required. Doesn't mean it's precluded. Not during the noon hour. I'll get the bias parameters out. Thank you to the YouTube visitors. Going to shut down this room momentarily. Have a very nice afternoon. Don't forget to get in the chat and find that link to sign up for some pretty big savings. Otherwise, maybe we'll see each other again in February. Take care.